Sweden's producer prices declined for the 12th successive month in June, but at a slightly slower rate than in the previous month, according to data released today. Joining me down the line to discuss is Johan Javeus, Chief Strategist with SEB based in Stockholm. Now, Johan, the index stayed 4.6 points below its historic average, indicating that the growth in the Swedish economy is still weaker than normal. However, consumers' assessment of both their own personal finances and the Swedish economy turned more positive. What would you say are the main factors driving this optimism?
Well, there are different reasons for the optimism among consumers, and one reason is, of course, that we've seen the stock market perform much better now than what has been the case in recent years. We've also seen house prices continuing on a relatively strong footing. And then, of course, you shouldn't underestimate the positive effects on sentiment from the stabilization that we've seen in Europe, especially the southern part of Europe, and, of course, the improvement that we now see in the US.
The Riksbank leader indicated some concern last month that markets might get messy come autumn time, which might leave the Scandi currencies more exposed due to their thinner liquidity. Is this a trend which SEB sees on the cards?
Well, I would say that we could, of course, not rule out that would be the case, but I wouldn't overestimate the risk that this will actually happen. First of all, I think that even though we will have setbacks in terms of the ongoing improvement in Europe, I doubt that they will be as severe as to have any strong impact on slightly less liquid currencies as the Swedish and Norwegian krona. So in that respect, I don't really think that this is a main scenario.
Despite these concerns and an inflationary level which is way below the 2% target, Riksbank have shown a renewed reluctance to intervene after cutting the repo level 4 times since December 2011. Is this lack of action the best route for the Swedish economy?
Well, that is a strong debate going on in Sweden as to what is the appropriate rate for interest rates. And obviously, the Riksbank is more concerned than I think most other economists about the risk that we now see from increased household borrowing. And they want to avoid cutting interest rates on the back of fueling that credit growth even further. On the other hand, everybody agrees that it's very difficult for the Riksbank to reach its 2% inflation target within the foreseeable future, and that should, of course, warrant that they would have the ability to actually lower rates and give the economy a bit more stimulus at this point in time. Even though things are moving in the right direction in terms of the growth and unemployment in Sweden, we are still at levels that are too high for unemployment and too weak for growth and too low for inflation. So what they should do is to lower interest rates, but I very much doubt that they will do this as long as we have potential problems on the credit growth and housing markets.
Given the seasonal variance, it can be difficult to gauge how important the recent unemployment figures actually are. However, some analysts were still expecting markets to trade on the figures released and forecasting a subsequent Euro-SEK roller coaster. But what is your outlook for this pair moving forward?
Well, we are positive towards the Swedish krona if we look to the second half of this year. Right now, where we are at 8.60 against the euro, we think that we are sort of in an area where we would consider selling the pair and going for a stronger krona. But ideally, we're looking to sell euro stock in the range 8.60 to 8.80. With a target towards the end of this year around 8.30, which is just above the lows that we saw late last year.
Johan, thank you so much for your time and perspective today. Viewers, please do click back to DukascopyTV for today's press review on South Korea's economic growth. Goodbye for now.